But you know what's not a beautiful thing is AMC and APE got a negative ruling last Friday, I believe, and we mentioned these two stocks a couple weeks ago about how there was some they were trading off of each other. So what's your update on that?
Yeah, it was gonna look like I was gonna take a much bigger hit on that one than I'll see the live update because over the weekend it was pretty bad. Let's see, live, it's going back up. It was at one point down a lot further, but yeah, it's back at 28% up, but at one point it was up 80% post market. And the thing about that that's so interesting, and I wrote about this in my newsletter, is the reason not only did the special master, I'll give some people the background on the situation. Basically, and for those that don't know, I was an early investor in AMC before it rallied. And if you go to my personal Twitter, it's actually pretty interesting. There's and you should definitely screenshot this for it. I called the short squeeze 2 days before it was going to happen. I pinned it to the top of my thing because I knew that stock inside and out. So I keep that pinned to the top of my Twitter. But basically there was a lot of dilution, and it makes sense when the stock goes up and you're in debt, there's going to be dilution. I don't know why some people, and there was so many things that people didn't really understand about that situation, in terms of how companies actually function and how short squeezes aren't necessarily good for them and they don't really want to help. But anyway, the company, the CEO Adam Aron voted again, put up a vote to issue more shares. The majority of retail investors that wanted a short squeeze voted against it, but they're in debt. And then he figured out a really interesting workaround, which, by the way, I did mention they had preferred shares to do that. One of the things that I got criticized for the AMC community was actually pointing out that they did have those preferred shares to dilute with. So I turned out to be right about everything there. But I wasn't right about this. And that's the really interesting thing. I still might be right eventually, but basically he went around the backs of retail investors, created these preferred shares, did this kind of pretty slimy thing to say non-voters he got to vote in absentia for. He also diluted with APE shares so he could kind of rig the vote. It's very, very interesting, and he deserved to be sued. But he did get sued by Allegheny County, which is a big pension fund. But the interesting part about it is, and this is the thing where I started to be okay, this is unprecedented. I've never seen it. That part, yes, there's a settlement. Basically, there was a settlement with Allegheny County. They did that. And then Judge Zern, who I think didn't want to take too much heat for deciding the case, actually hired a special master to rule and get an extra advice. And the special master asked them to essentially pass the settlement. And what was weird is, in the first place, I can't believe the main plaintiff, the one who sued Allegheny County, and AMC settled, and that alone, the fact that they did that it kind of wasn't accepted is very interesting. And then it got more interesting when the settlement offer got rejected, which I was not betting for, especially because the special master that was hired as an outside said the settlement should be accepted. But now, what makes it really interesting is AMC is likely to go bankrupt if they don't get this conversion, because I would say that with APE trading so much lower, which is the preferred shares trading so much lower than AMC, I would say that they're unlikely to dilute at that lower price. So the situation that we might get ourselves into, if that's the case, is basically they can't raise capital. They don't want to dilute the lower priced thing that they can dilute, which is APE. And they might ultimately file for bankruptcy. And that's the thing people don't understand. I've been on the other side of this, where a company will trip its leverage ratio covenant and just file for bankruptcy because that's the easy thing. They can have cash in their books. These covenants are what they are. So some people I've seen point out and say oh, there's cash. It doesn't matter. That cash is just part of a financial test that if they fail, which by the way, they could do things to basically not stop themselves from failing. and then they're bankrupt. And they might decide that that's easier than dealing with the retail investors. And to be honest, it might be really necessary if they can't raise more capital because their business is not a good business anymore. And like, it's crazy to have it going up enough with like all this writer strike and like actor strike. Like their content is about to get like another big hole in it. Like, so for the stock to be going up is pretty funny in light of that situation. Especially like obviously there's all these AMC investors that are still excited about the squeeze, but it's very interesting because like, you know, you could say that denying the settlement is, you know, for the retail investors, but on the other hand, you know, they might end up getting wiped out to zero. That might happen imminently because of this ruling. So it's a very, very interesting situation. And like the one thing that I hope most retail investors take to heart, and it's the one thing that was kind of sad about like what I think my situation was when I observed it, is like I've seen a lot of AMC people, GME, I've seen them turn into the people that they supposedly hate. Where, you know, now like these investments have gone down like 70-80% in the case of AMC, like probably less today. But they're still recruiting people saying, oh, it's about to squeeze. The squeeze is going to happen. Like, you know, and it's just like going to happen forever. Well, the thing is, it already did happen. The stock went to 70. That's like a minimum 10x return for a lot of like, you know, a lot of people that I knew, maybe more, maybe less, you know, and it's just like, that was your squeeze. That was your moment to make the money. But everybody, once it went up to 70, they were like, 70 is not enough. I want 100. I want 1,000. I want 1,000,000. And it's like, with that kind of attitude, like you'll never be able to like make money and you'll never be able to do it. And for anyone that wants to stick it to Wall Street, like I've got news for you. The only way to stick it to Wall Street is by making money yourself. They don't care. If you lose money, like many have on AMC, and they make money, you did nothing to stop them. You played right into their hand. And increasingly what I've heard is a lot of Wall Street will actually like short stocks, buy call options, make money as they know retail will charge in, think it's a short squeeze. When it goes up, like sell their call options for a huge profit, then continue to short it and then make money on the way down both ways because they know exactly what retail is going to do. And if there's one message I can pass on to retail, that's the most important thing, and I do it again and again, is never show your playbook. Once they know your playbook and you're doing the same play, you're going to get beat every time. Even the smartest hedge fund people that have a trade that works, they'll only do it so many times in the same way or whatever because they know it has a lifespan. And I see so many people fail at that. And it's, you know, it's sad to see it go in this direction because the other thing I was alluding to is now you just see all of these meme stock people like recruiting people nonstop, saying the short squeeze is about to happen, pulling in people constantly. And that's exactly what hedge funds do. They go online, they sell people on trades. The fundamentals of the trade aren't great. They're just trying to get people to do what they want, buy their stock so it goes up. It happens in crypto all the time. So if you find yourself doing that, maybe rethink and maybe think about selling someone on a stock that you think actually has really good growth potential as a business instead of, you know, hunting for these short squeezes, these big bucks, like these quick bucks all the time.